Do you know how to determine the right amount of life insurance coverage you need for yourself and your family? Well, if not, we're going to provide you with 5 simple steps on how to determine your number in our financial freedom video, so stay locked in. Hi, my name is Carson Graves, certified financial planner and president and CEO of the Retirement Education Center.
And my name is Andrea Graves, Director of Operations at the Retirement Education Center. For additional concepts on how to maximize your retirement, please subscribe to our YouTube channel and hit the notification bell to be notified when we upload new videos. Welcome back to our channel. Well, Carson, you've said many times that during the retirement planning process, the importance of life insurance is overlooked. So why is that?
Yeah, a lot of times, Andrea, during the retirement planning process, many people are focusing on investment planning. They're focusing on their savings and making sure that they have the right amount of retirement income when they retire. And of course, that's all important, and they should focus on those things. And I would agree with anyone putting that as a primary focus on their retirement. But with that being said, having a proper amount of life insurance included within that retirement planning process is going to be key to make sure that if anything goes wrong before you hit your retirement goals, you're going to leave your family in a better position. And so today, what we're going to do is focus on 5 simple steps that you can take to determine the right amount of life insurance you need to have for your retirement planning lifestyle. But before we get into that, there are always 2 rules to retirement income that we give you. And Andrea, what are those 2 rules?
Well, rule number 1 is to never run out of money, and rule number 2 is to never forget rule number 1.
Okay, so let's go ahead and jump into our lesson today and talk about the 5 simple steps that you need to be able to take in order to determine the right amount of life insurance you need for your lifestyle. So let's go ahead and first talk about assessing your financial responsibilities to determine the right amount of life insurance coverage that you will need for yourself and your family. Now, the first thing that you need to really look at is your income replacement. You need to consider how much your loved ones would need to maintain their standard of living if you were no longer around. Now, let's just say, for example, you had an income of $60,000 per year. And you want to give your beneficiaries, if you were to pass away, at least 10 years of this income to maybe help your spouse continue to maintain the household, continue to keep your kids in the private school that you guys may have them in. Maybe you want to provide this income for at least 10 years. Well, in this case, simply, you would want to at least start here and take a look at a policy that will be worth about $600,000. The next thing you want to consider under your financial responsibilities is your debts and liabilities. Now, you want to calculate all of your outstanding debts, your mortgage, your car loans, student loans, credit card debts, things like that. And you also want to start looking at the future cost of education for your kids and determine if you want them to attend public or private school. And then you want to estimate the cost for your funeral and other expenses for the estate. If you can do this properly, that's going to give you an indication as well how much you want to add to your life insurance policy. The second thing that you're going to want to look at and calculate when it comes to determining the right amount of life insurance for yourself are your existing assets and savings. Now, you want to take into account all of your savings that can help cover your expenses. Things like the amount of money you have in savings, your investments, real estate, and other investment assets that you may have to provide income for your estate if anything were to happen to you untimely. The next step that you're going to need to consider when it comes to how much insurance coverage that you're going to want to have for yourself and your family is the rising cost of inflation in the future and any future expenses. Now, when you're taking a look at estimating the cost of inflation, how that's going to impact your family and your expenses over time, it is important to understand kind of what inflation has been in the U.S. over the past, 20 years or so. You can be conservative and go 2.5%, or you can consider maybe a higher inflation rate of 4% to make sure you don't miss the mark. It just depends on how aggressive you want to be when it comes to considering inflation. But it's definitely a factor that you're going to have to consider when you're talking about your life insurance, because as I mentioned, a $600,000 policy today probably won't be worth $600,000 15 or 20 years from now. You also need to consider the potential future costs of healthcare expenses, especially if you have a child that have special needs. So if you were to pass away and your income is gone, your spouse that you leave behind is going to be also left behind with the expenses that is going to take to care for a special needs child. So if you have this in your equation, you're going to want to account for that. And you're also going to need to account for the fact that your future spouse could potentially live a long lifespan without you and could end up in a situation to where they have high medical expenses that need to be accounted for. Number 4 on this list is definitely to calculate the amount of coverage that you need. And as we mentioned, you don't just want to use an insurance calculator. You definitely want to sit down with a certified financial planner who can help you scope out other ideals that may need to be thought of. Now, here, let's just take the ideal of the income replacement. We talked about multiplying your annual income by the number of years that you want to provide for your family. So let's look at this example here. So as we said before, let's just say this income was $60,000 a year and you wanted to provide that income for at least 10 years. So we'll start there. That is going to indicate to us that we at least need to start this policy amount out at $600,000. And then we want to add up, as I mentioned, your debts and other expenses that you want to account for. Here, let's just say your total debts and future expenses would equate to $400,000 after speaking to an advisor. So in this particular situation, as you can see, we know that we now need at least $1 million to cover your income and expenses for your family and your estate. Then what we want to do is take a look at your assets that you currently have, and we want to subtract any of your savings and other assets that could be used to cover those expenses. So let's just say after looking at everything from your 401ks, your IRAs, money in your savings accounts, your real estate, we say you have a total asset that could be used for the estate of $600,000. So in this particular situation, we would just take the $1 million, subtract the $600,000 that you have, and say that you really just need a policy of about $400,000. And of course, we need to take this amount and account for inflation to give you a more accurate amount of coverage that you may want to provide for your family in case you pass away too soon. The last step in this process, when you've finally figured out how much insurance coverage that you need, is that you're going to need to choose the right type of life insurance. This is the most critical step in this process. Now, you're going to need to explore different type of insurance policies that suit your need. That is why it's so important that you speak to someone who can help you understand the type of policy that you're going to need for your particular situation. Now, we understand that there are basically 2 types of policies that you can deal with. The first one that we're going to look at is term life insurance. Now, if you're considering getting a term life insurance policy, just understand this is going to be a lower cost option for you, and it will provide coverage for a specified period of time, such as 10 years, 20 years, or maybe 30 years. Now, if you happen to live past these years, just know you're going to have to reinsure yourself, and you don't know if you're going to be insurable at that time. And also, you're going to have to be dead within these time frames as well, because obviously, if you outlive the policy, that policy would no longer be in effect. The second type of policy that you can consider if you wanted to take the if factor out of that equation is to look at a whole life or maybe a universal life insurance policy, because this is going to be coverage that's going to be in place for your entire life. And it will also include cash value if at some point down the road you no longer need the insurance coverage. So that's going to be something that you're going to have to discuss with your advisor to see what's going to be better suited for you. And yes, if you consider a whole life or universal life, which is more or less a permanent coverage, it's going to cost more than term. But to me, I always tell my clients that in the long run, term ends up costing you a lot more than what that whole life would. And the reason why I say that is because your permanent life insurance policy is going to be there when something happens. And it also is going to be an opportunity for you to leave a legacy for your estate.
All right, Carson, so what's the moral of this video?
Well, Andrea, the moral of this video is simple. Determining the right amount of life insurance coverage involves careful consideration of your financial responsibilities, your goals, and your future needs. And by following these 5 simple steps and seeking the guidance of a financial advisor, you can ensure that your loved ones are protected financially in the event of the unexpected.
After this video, please check out our other videos that will give you tips on how to maximize your retirement. And if you like this video, please give it a thumbs up, subscribe to our YouTube channel, and share it with a friend. Thanks for watching, and remember, if you have questions,
we have answers. Please note that these videos are created for educational purposes only, and that you should always seek out your own financial advisor, your own tax advisor, and your own attorney regarding your personal situation. Also, if you are looking for an independent fiduciary advisor to help you with these types of complex financial matters, we highly recommend that you utilize the links in our description below and go ahead and schedule a 1-hour free consultation with us today.